All right, so we're diving into American Express's Q3 2024 earnings today.
Yeah.
And let me tell you, some of these numbers are pretty wild. We're talking 10 straight quarters of record revenue.
Definitely eye-catching.
Yeah, and we're not just going to scratch the surface here. We're going deep on what AXP's performance says about their whole strategy, how they're navigating this unpredictable economy, and what it all means for investors.
Yeah.
Especially those of you interested in premium products and those customer bases everyone
Right,
wants.
the premium market.
Yeah, exactly. And to help us unpack all of this, I've got our expert analyst here. They live and breathe this stuff, so get ready for some serious insights.
Thanks for having me. Happy to be here.
Yeah.
AXP's performance this quarter, it's a really interesting case study, especially with the current economic climate as the backdrop.
For sure. So I always like to start with the big flashy numbers. American Express pulled in a record $16.6 billion in revenue. That's an 8% jump compared to last year.
Wow.
Yeah, and their earnings per share. A solid $3.49 blew past Wall Street's expectations. What's your take on that?
It's seriously impressive,
Mm-hmm.
even for a company like American Express that's known for its consistency. I mean, think about it. We're in a time where the economic indicators are all over the place, and they're still pulling off this kind of growth. That tells me their focus on premium customers and lending is working. It's giving them some real protection against the market volatility.
Okay, so let's dig into this premium strategy, because it seems like that's the engine driving their success. They added, 3.3 million new cardholders just this quarter?
Yeah, 3.2 million.
What really stood out to me was that a big chunk of those new cards are going to millennials and Gen Z. What's the significance of that for AXP?
It shows that AXP is playing the long game. Millennials and Gen Z, they're the future of the premium market. Those are the consumers who are going to be driving spending in the coming years, and AXP knows that.
It's like they're setting themselves up to be the go-to for that next generation of, the big spenders, right? But it's not just about getting those new cardholders, is it? It's about how much they're spending and what they're spending on.
You know that. AXP is laser focused on high engagement, high spending, and we can see that in the success of the U.S. Consumer Gold Card, specifically how its acquisitions are even surpassing the Platinum Card. And you guessed it, especially among millennials and Gen Z.
The Gold Card.
Yeah.
Really, I always thought the Platinum Card was like the card to have.
It used to be, but AXP, they're really good at refreshing their products to keep them, relevant, desirable. They've revamped the Gold Card's benefits, specifically targeting a younger demographic. Think like dining experiences, travel perks that actually fit with how they travel, and a really strong digital experience.
Makes sense, especially with how much restaurant spending is growing right now.
Yeah.
It's actually AXP's fastest growing category within travel and entertainment. And it's not just about the perks on the card, is it? AXP has gone all in, buying companies like Resy, Tock, and Room. They're practically building a dining empire at this point.
It's a smart move for sure. They understand that their premium customer base, well, that's a goldmine for high-end restaurants. So by creating this whole ecosystem around dining reservations, exclusive experiences, even point-of-sale systems, they're not just offering a card, they're offering a way into this whole world of culinary experiences.
And that probably makes them super attractive to both restaurants and cardholders, right?
Yeah.
The restaurants, they get access to all of AXP's premium customers, and the cardholders, they get exclusive access and experiences. It's a win-win.
Exactly. And that exclusivity, it allows AXP to justify those premium prices, which you can see in their financials, their net card fees. The money they make from those annual fees are up a hefty 18%.
Wow. So people are willing to pay for that premium experience? But let's be real, no company's perfect. What are some of the headwinds AXP might face even with all this success?
Well, even though AXP is bringing in record revenues, there are definitely a few things investors should keep an eye on. For one, there's been a small dip in spending per card member.
That makes sense though, right? With all the economic uncertainty going around, even the people who are well off are probably tightening their belts a bit. Is that what you're seeing?
That's part of it. We're seeing that tenured cardholders, the ones who've been with AXP for a while, they aren't spending as freely as they were before. It's a little more obvious with the small business segment. Even though AXP is doing a great job getting and keeping those customers, small businesses are facing their own set of challenges in this economy.
So it's like a ripple effect, right? The overall economic worries make everyone a bit more cautious, even those who aren't feeling it directly. It makes you wonder if this spending slowdown is just temporary or a sign of things to come. What do you think? A blip or a trend?
Yeah, that's the big question, isn't it? Tough to say for sure right now, but definitely something to watch closely.
And then on top of that uncertainty, you've got the election coming up, which always throws a curveball at economic forecasts. Plus, AXT's been spending a lot on marketing, like almost $1.5 billion last quarter. And then they're pouring money into tech upgrades, too. That's got to eat into their profits at some point, right?
Yeah, it's a valid concern, but here's where things get interesting. Even with those higher expenses, AXP is managing to stay surprisingly efficient. Their operating efficiency is still really strong, and they're keeping a tight leash on things like rewards programs and card member services. So they're spending, yeah, but it's strategic.
So it's not just it's spending smart. They're playing chess, not checkers.
Exactly. And their credit metrics are still looking really good, which says a lot about the quality of their customer base and their lending practices.
Right. Their delinquency rates are still really low, especially for this time of year. And their write-off rates actually went down this quarter to just 1.9%. That's like the opposite of what you'd expect with the economy being shaky.
It goes back to that focus on the premium customer. Those are the people who are less likely to default, even when things get tough.
So it sounds like even with a few potential bumps in the road, AXP has a lot going for it. But for investors, the big question is always, what does the future hold?
Right, we got to look ahead. AXP has been pretty open about their goal of reaching 10% revenue growth over the long term.
And a big part of that growth depends on their bill business, which basically means how much people are charging to their AXP cards.
Exactly. And while bill business growth has been a bit slower this year, around 6%, they've still managed to achieve some really impressive earnings growth. In fact, they actually increased their earnings per share guidance for the year, projecting somewhere between $13.75 and $14.05. That's a pretty strong signal.
Yeah, it's like they're saying, hey, investors, we know what we're doing and we're feeling good about the future.
Yeah, exactly. They're in it for the long haul, investing in their future while still delivering for their shareholders right now.
And it seems like those investments, especially in the dining space, are really about changing what it means to be an American Express cardholder. It's not just a card, it's a whole lifestyle.
Absolutely. They understand that these days they need to be more than just a way to pay. They want to be a brand that represents those exclusive experiences that taste of the good life, especially for those younger generations who really value that kind of thing.
It's a bold approach, no doubt. But is it enough to hit that 10% growth target? And what will the American Express Club even look like in a few years? Those are the million-dollar questions. Well, that gives us a lot to think about. Thanks for joining us for this deep dive into American Express. Until next time, keep learning, keep investing, and keep asking the right questions.